Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis, currency breakdown of the Great British Pound USD. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and to help put some extra money into your pocket, okay? So with that said, let's go ahead and get started to break down this chart and this currency pair, okay? So let us discuss what's happening with the currencies before we discuss what's physically happening on the chart. Now, the British pound has had some very good news come out about it since the opening and beginning of this trading week. Okay, we've had a lot of good news come out about the British pound, which is good because that means it should be strengthening. However, we still have several dark clouds hanging over the British pound. This is due to inflation, rising gas prices, and also the geopolitics affecting the European continent's economy. Okay. Then we also have the FUD that's surrounding the European continent's economy with the fear, uncertainty, and doubt surrounding the European continent's economy due to the Ukrainian-Russian war being fought in Europe. Okay. And then also we have ever more we've been hearing about sanctions, increasing sanctions that they're going to be trying to be pushing on Russia, but the writing on the wall is pretty clear on these sanctions. Yes, these sanctions are somewhat hurting Russia, but it is having more of a negative effect on the global economy, and the global economy itself, with Europe taking the brunt of the more of the hit of these negative effects from the Russian sanctions. Okay, so as America and NATO continue to sanction Russia, the reverse negative effect is going to hit Europe even harder. Okay, and it's also going to hit UK even harder because even though the United Kingdom is not a part of the European Union, it is still considered a country within Europe, and its closest trading partner, which is the European Union, is being devastated by these sanctions and by the uncertainty due to its overall economy from the Russian-Ukrainian war. Okay, so as long as these things continue, we will continue to see a weakening of the British pound, of the CHF, and of the euro, which are the major three European continents currencies, regardless of how good their economic news is. Okay, so with that said, now let's dive into the USD. The USD doing the opening of on Tuesday around prior to and going into yesterday's New York trading session on Tuesday, we did have a lot of positive news come out. We did have some negative news, but we have more positive news than negative news. And then the latter part of the New York session, we did have oil news came out that reported that there was an increase in the oil supply, which brought down the price of oil per barrel, which brought down prices at the gas pump, which started to also further strengthen the USD as well. So basically, we're in a situation where we have the Great British Pound. That currency is still continuing to lose strength due to its own economic woes and the overall geopolitics surrounding the entire European continent's economy as a whole through the sanctions. And we have a US dollar that's gaining strength because of the more active stance the government is taking to combat inflation and to bring down gas prices. Okay, so with that being said, now let's dive into what's happening on the chart. As you can see, we've been ranging out with this as being our upper extremity of our range. This has been our lower extremity of our range. This is our low extreme range border, and this is our high extreme range border. Okay, and basically what happens is that price is staying within this range somewhat, where every time we get to here, we go, and every time we get to this area, we have a pickup in price. But due to the weakening of the British pound, excuse me, the Great British Pound, we are going to see a continuation of price to slip and slip and slip till we get to more of our extreme border of our lower part of our range before we continue to see an uptake. Okay, so what can happen here is that we could bounce from this area to here, or what may continue happening is we may continue to see a slip down to actually this area here before we see an initial price pick up. Okay, so as long as these sanctions go, if these sanctions go into the effect or start talking about them more frequently and aggressively on the various talking news channels and in these reports about these sanctions coming out, then we're going to continue to see a slip in the price to actually this area here before we continue to go up. Or we could continue just to bounce from this area here, go up to here, then start to drop from here, and then also send a slip down. Okay, so let's run over those three scenarios one more time. We could have a potential drop here. Okay, once we get to here, we could have a potential drop down and continue to slide down. Or what we could have is we'll range from this area here, and then price will slide down to this area here before we have another potential push up. Okay. I hope this information was helpful for you guys. Happy trading.